We've come to another FOMC interest rate decision week, and there seems to be a lot of FOMO in the air with various rallies taking place. Let's look at some news and check some charts. The mega caps have rallied hard as this Forbes article illustrates 7 tech stocks account for more than 90% of S&P 500's gains for the year. And they say signaling market rally may not be so healthy, and that's because of the breadth. For a sustained rally, you would need broad market participation. And what's the secret and commonality of the 7 tech stocks that have reported earnings? Apparently, the secret is just saying AI during earnings calls. And it's not to say that AI is not a powerful force for the future, but are these rallies warranted and sustainable based on current income and projections? So Jerome, if you watched this before Wednesday, if you have not considered just repeating AI over and over again at the meeting Wednesday, maybe you should consider doing that. Another thing that could change the Fed's interest rate decision is we have another bank failure, this time First Republic Bank, and the deal to buy them out is expected today. Even with all of this going on, there's no fear in the market. The VIX is now down in the 15s and approaching the 52-week low. Of course, that means I bought VIX calls Friday and plan to add more if it continues to drop further. Here's the economic calendar for the week showing the Fed interest rate decision during market hours on Wednesday, followed by the Fed press conference. Often the press conference is the more important component, so the first move that stocks make based on the announcement is not necessarily the right move, so be careful chasing any sharp movements following the decision and the press conference. Starting out looking at the Qs chart on the weekly time frame, you can see that, this goes back to 2020, mid-2020, and we were at about 260 then, and we just revisited 260 in October last year, and we've had some big rallies and some big declines on the weekly chart. Right now we're getting into overextended. There's a negative divergence on the weekly chart. That's because we have a higher high here and a lower high, so that's a negative divergence. The moving average, the MACD, is separated, and that can be like a turning point. You can see in the past where it's really separated here, that can mark a short-term top. In terms of some trade setups or trade ideas, on Meta, there are some notable gaps on the chart. You had this big gap up Thursday, and then we just kind of ramped and camped into Friday. Bought some puts a few months in the future, at least playing this first gap fill, if not the second one down in the 150s, 160s. There's also a gap down here in the hundreds, so this could be an inflection point for Meta. Looking at the Tesla chart on the daily time frame, after the earnings call had a gap down, so we still got a gap in the 170, 175 area to the upside, and there's also a gap in the 140, 144 area to the downside. Could go either way. We could rally into the interest rate decision. That's typically what happens leading up to the Fed meetings is rallies, so we might close that gap before Wednesday. Looking at Apple on the 15-minute time frame, a reminder they report earnings on May the 4th be with you following the interest rate decision by the Fed. So it could be a really dynamic week for Apple. And they have a gap down here on the 15-minute chart at 165. The reason I bring up gaps so frequently is the majority of gaps get filled. And it doesn't mean they happen right away, but they're notable to look out for because if you're trying to play reversals, that could be where the price is headed. Here's NVIDIA on the daily chart, and you can just see that they've had a monster move since October of last year. I think it's over 100%, $110 to 220 would be 100%. So we're above that. There are a lot of gaps on the chart. Down here in the 215, 220 range, you can see a gap there. There's also a gap down here lower in the 150 area. A lot of gaps to the downside, and I think their forward PE is like 150, something like that. So it could be a lot of downside for them. Now we're looking at SVOL on the weekly time frame. I did a video about SVOL and their strategy. So basically SVOL bets on decreasing volatility. And so it makes sense that we're up at a high here because the VIX is down in the 15s. But if you look at the channel commodity index, typically when SVOL gets into this overbought territory where we're in blue above the positive 100, that would be a good time to exit SVOL, take profits. And so we've hit that 4 times in a little over a year and a half. If you are in SVOL and looking to trade it, the weekly time frame for the channel commodity index would be a great time to exit, and a great time to buy is when it's below negative 100 down here. Another thing you could do if you just want to hold on to SVOL as a position is buy VIX calls on the weekly time frame when it gets overbought. So SVOL overbought, that means volatility is likely to increase just from a statistical perspective. So you can buy some long-term calls to hedge yourself. And that's what I did last week. Another fan favorite, SCHD, on the weekly time frame. You can see that we've just kind of trended sideways since May of 2021. You know, if you draw a straight line across here, we're at $72, and that's where we were back in May of 2021. And this is considering total return. It includes like the dividend payout and everything. Stockcharts.com includes total return in their price. And that's why I like to sell covered calls on SCHD. I typically look for overextensions to the upside, and then I sell covered calls. And so during this time period, you can make additional income and double your yield. I also have a video about that if you're interested in learning more. That's all I've got for today. I'm working on a few new videos. One of my next ones is methods to enhance your performance to potentially beat the market. And some of those strategies are buy the close, sell the open, and another using leaps. So if those sound like things that interest you in the future, please make sure to like and subscribe so you don't miss any future videos. Thanks for joining me. Till next time.